Hello and welcome to the Weekly Watch podcast series. I'm Jim McCormick, Global Head of Desk Strategy at NatWest Markets. This series helps you cut through the noise in global financial markets with a quick take on the upcoming trends to watch.
Last week, we saw the lower return, higher volatility story I spoke about on last Monday's call take a little bit more shape. And there's probably two main drivers from last week that are worth focusing on. Obviously, the first is the UK. And I did mention last week that Brexit was not really a big client focus, but that would likely change. And I think it's safe to say that Brexit is now clearly back on everyone's radar. And I'm not going to cover all the details of what happened last week. I think we know them well. But suffice to say that if you add things up, at least our view is the probability of a no-deal Brexit is now around 40%. So not that far off from a coin toss. And our base case remains a deal is ultimately done, but the risks of an accident are now very high. Bad news in the UK didn't end with Brexit. We continued to see a surge in COVID cases, which triggered the first nationwide tightening of restrictions since last spring. So things are clearly on the move there as well. So renewed no-deal Brexit risk combined with rising COVID cases creates some big downside risk to an economic recovery that is already pretty fragile. Second driver is clearly the U.S., where I think there's two things we need to stay focused on. The first is obviously the election. So I talk a lot about the 538 election model, which now has Trump probabilities at 24%, which is the lowest since mid-July. This now matters because early voting in states really starts over the next couple of weeks. So we need to pay closer attention to the polls. Second risk here is fiscal policy. So we talked about it last week. Congress did fail to pass a new package last week. So a deal before the election now looks pretty unlikely. And when the debates began on this package 6 or 7 weeks ago, it seemed unthinkable that no agreement would be reached. And this is clearly a very big risk for U.S. growth. My chart of the week in the weekly thematic review shows the impending story of a fiscal cliff, which I think you'll hear a lot more about. For markets, I'd make 3 points about this low return, high volatility theme. So the first is probably the most important one for this room, which is this is not March. Low returns need not mean deeply negative returns, and that's not our base case. Second point here is perhaps the biggest worry in markets is the 15% drop in oil prices since the start of September, in part because of what it implies, which is demand is slowing again, but also it puts at risk a lot of asset prices that are linked to the oil price. And in terms of focus, OPEC is meeting this week, so we'll get a little more detail on the current supply deal. And I guess the last point on markets is even with low returns, there really isn't a strong case for fixed income to rally or the dollar to rally. And that's certainly the pattern that we've seen so far. This week is a fairly busy one. The UK, it will probably be the main focus. So we should get a vote on the internal market bill, perhaps as early as today. The Bank of England on Thursday, we expect no change, but a fairly dovish tone. And we still look for additional QE by February. It's a heavy data week. And of course, we'll be watching the COVID trends in the US. So the FX team has been bearish on sterling for some time now, and we certainly remain so. In the US, we think the Fed meeting on Wednesday will disappoint people who are looking for any new changes. So no new QE expected, no hint that the Fed is going to buy at the longer end of the curve. So net, the case for a steeper US curve to us remains pretty compelling. And outside of the UK, in terms of data, we get the US retail sales and the usual China activity numbers.
I hope you enjoyed this episode of the Weekly Watch, and please do subscribe to our channel to get future episodes. We also encourage you to explore more of our content on our website and social media channels. Speak to you again soon.